Okay, so this is Chris at thetraderguy.com, and I'm going to take a look at the end of the week. Um, I also did a written piece on the US dollar index, so go to the site and check that out. Really, at this point, I'm going to focus on Europe at the moment because a lot of people, I get emails occasionally. How low can the euro go? Well, once we were getting close to parity, can it really break down below parity? And now can it really get to 95 cents? I think the answer is yes. That being said, let's take a look here in the DAX, 12,500. We tried to pierce it during the day. We did, but then we failed at the very first signs of any technical resistance. Keep in mind that stocks are a reflection of risk appetite as well. So this kind of all ties in together. German index, as that goes, so goes the rest of Europe. Don't believe me? I'll go through a couple of indices here. We'll kind of see how this looks, because to me, really doesn't take a lot of imagination to say that maybe there's a bearish flag there. So I remain very negative on DAX, on Germany in general. And if that's going to be the case, France isn't going to look a whole lot different. So here we are. There's your daily candlestick. It's the exact same chart. You go to other potential trades here in the European Union, the Italian, the MIB. I don't see any reason why it doesn't go back down to 20,000. So we're seeing the same play here. It's short European stocks. So let me get rid of this and this, and get rid of the ATX. It's not really going to do you much. So let's compare the euro dollar. And let's make this white, just so it's a little easier to see. And let's make it thinner. I mean, you can see it just marches in lockstep with this. Let's go back to the DAX. I mean, so what do you see here? Well, what you see is it's not a situation where can you hide in Germany as opposed to being in Italy? No, the answer is you might lose less on a percentage basis, but this is just money leaving Europe, and it has been, and it looks like it's going to continue. So who's the beneficiary? That's really what you're looking for. Could be the United States. Probably would be the United States, but more likely it's going to be the US dollar. And I looked at this in that written piece that I did about an hour or two ago. So let's go back here. Let's take a look at the DXY. And I had drawn this on a monthly chart. And you can see, I mean, this is an area of significant resistance. I mean, this goes back to, this is when we were still pegged to gold. See how flat it was? And then we got off the gold standard. So the question is, can we break through 120? We could. Do we do it right away? Probably not. We're probably going to see some choppiness. But I think the euro itself is going to continue to push the dollar higher, just simply because there's nowhere else to go. You have a lot of debt out there denominated in dollars that has to be repaid back. There is a dollar shortage, if you can believe that. I know the talking point is Fed go burr, but if loans are not being created, dollars are not being created. So with that being said, it looks to me like we continue to buy dips in the dollar, and we continue to sell rips in European indices. You can really simplify the trade right now as a simple matter of, if the US gets cheap, meaning the currency, it's a buy, just as if other things that are a little bit more further out on the risk spectrum, the DAX, the FTSE 100, the MIB, Bitcoin, Ethereum, anything like that rips, it's a sell. This is people heading back into cash. They're not even heading into the stock market. So take a look at S&P 500, you can see it closed very poorly. In some ways, I think it closed worse than the European indices because it had such a nice head start. Doesn't mean we can't bounce, but the general attitude remains U.S. dollar strength. That's it. That's as simple as this trade is. You can also see it over here. This is gold. Gold looks miserable. Gold is going lower. Gold is going much lower. Gold is probably going to 1,500. So still U.S. dollars. That's the thing to own. That's why Forex traders are killing it right now, because it's so easy to get your hands on dollars in the Forex world. You know, if you're just trading stocks, then you're stuck with like UUP here in the NYSE. So that's all I have to say. U.S. dollar remains strong. I see nothing on any of the charts that's going to change that. There is talk of, well, eventually the Fed's going to pivot. Well, yeah, they will, but we need to get closer to the 2% inflation rate that they like. Unfortunately, we're at about 8%. So keep that in mind.